Well, the rand, of course, seen as a measure of risk, and looking at its performance, risk aversion has abated quite tremendously.
Oh, absolutely, Alishia. As I mentioned, I think earlier in the week, everything has been in the rand's favor, from commodity prices to equity prices to current account deficits to the dollar, and that's all fed through into a greater risk appetite. Investors in the world looking for emerging market strength, and as a result, the rand has benefited quite substantially.
We were talking about the fact earlier that, we've got equities on the steady upward climb, and on the local front, the JSE heading for its highest point this year. Does that suggest a sustainable rally in your books, and the rand's gains to be sustained as well?
Well, I think Mr. Bernanke's comments on I think it was Tuesday, certainly put an element of confidence into the market. I'm a little bit cautious at this point. I think, we've done so much so quickly. The rand has done roughly 8% just this month alone since the beginning of September. And that does create some concern. I think the market is all positioned one way. Many, the greater majority of players are short of dollars across the globe, long of gold prices and long of commodity. We're going to need some really exciting impetus to drive these markets higher in the very, very short term. As far as the medium term is concerned, I think if Mr. Bernanke's comments do play out and he's correct, the catalyst for that will be a resumption in jobs, growth in jobs data, and that will be the real key. That suggests that the global economy is on the mend. The jury's out for now, Alishia, I'm afraid.
When it comes to the rand, it's the longer-term effect, specifically on the manufacturing side of things, and more importantly on the mining side of things as well, where traders have become, market watchers, economists have become tremendously cautious because they're suggesting that we simply will not have a recovery as strong as anticipated should the rand be as strong as it is right now.
I think that's absolutely right. Unless the global economy surges ahead, then you can afford a stronger currency, because the demand for commodities and demand for resources and demand for our exports resumes, and then you can support a stronger currency. But in the current economic climate of still job losses going on around the world, a strong rand has a huge impact on our manufacturing and on our export sector. And we become less competitive by the day as the rand puts on the kind of performances that it has done over the last few weeks.
With that being said, it's not inflation that's the worry. It's the fact that our rand is so strong, and that, as you say, it could hold us back from a stronger economic recovery. So what's your outlook then for the Reserve Bank next week? Is it going to have to do some serious rate cutting moving forward?
There's a lot of question marks around the Reserve Bank's future action. Their mandate is still to fight inflation, and we know even though inflation has come down, it's still stubbornly high, above the target range. So there is a lot of confusion as to what the Reserve Bank can do to alleviate the situation, because one thing interest rate cuts do, as well as they stimulate the economy, it can lead to the wrong kind of stimulus, where the consumer gets ahead of itself and creates another credit binge, and that's not what they're looking for. They're looking to stimulate manufacturing, they're looking to stimulate the export sector. So a bit of a dilemma for the Reserve Bank. It's not simply that easy just to cut interest rates and hope to rectify the situation that way.
Of course, another aspect to consider is that it will affect our foreign investors who are looking at our carry trade at this moment, at this point, comparatively speaking to interest rates that are sitting at zero levels overseas.
Oh, no, there's no doubt. That is playing an element, that is playing a role at the moment, the current attraction of the rand. And when risk appetite is heightened, then the hunt for yield is on. But it's not only that's driving the rand at the moment. It's inflows into the bond market, inflows into the equity market on the back of resurgent resources prices. So as I said in the entrance to the show, it's all factors playing in the rand's favor at the moment.
Well, let's take a look at that risk appetite, because one thing that could possibly affect their, talking about measures of risk, is political risk. I mean, we had Cosatu during the course of this week, of course, having sharply criticized Minister in the Presidency, Trevor Manuel, for allegedly accumulating just too much power, some saying indicating growing tension in the ruling alliance over economic policy moving forward. Have the markets actually made much of that news?
I don't think so, Alishia, and you know, this is nothing new. Casadu's has had many issues that they've challenged over the years. They're still in the tripartite government, and I think there is a move now, you know, within government itself to curb excessive spending on so-called luxury items. But I don't think the external market or the global market is focusing on those issues because they're not new. And, you know, if one just thinks of all the strikes that we've had recently, virtually every sector in the market in South Africa has been on strike for higher wage demands, and the market has just ignored all of that risk for now, I must say.